I built a brand that went viral and was valued at $100 million, but I ended up going bankrupt.
This is Pocket Watching with JT.
Hey, Pocket Watchers, I am certified financial planner Jayson Thornton, and this is the Bankruptcy Breakdown. This is where I react to the financial failures of your favorite celebrities and influencers so you can get the financial lesson without going through the trouble. Let's go, Pocket Watching. On this episode, I will be reacting to the recent bankruptcy filing of Pinky Cole, the creator of Slutty Vegan. Now let's give this woman her flowers. Aisha Pinky Cole is the high-profile entrepreneur and media personality best known as the founder and CEO of Slutty Vegan. This is a plant-based burger phenomenon that started in a shared kitchen back in 2018, then exploded into a national brand. Now, under her leadership, Slutty Vegan reached a reported $100 million valuation. That is not a common thing, people. That is a big deal. Such a big deal that this woman was named to Time Magazine's Time 100 Next list. She was also featured on the cover of magazines like Forbes and Essence for her ability to build this national brand. Now, more recently, she has made a move that will most likely keep her name and her brand in front of our faces. She has been announced as the newest cast member of Bravo's The Real Housewives of Atlanta for their 17th season. Now, to be honest, all of the things I just said is extremely impressive, but I do not know her for any of those things. I gotta be honest. I guess I live in some kind of bubble and I was unaware of any of those things. The reason why this woman actually hit my radar was back in 2022, I believe. She was the keynote speaker at the graduation of Clark Atlanta. And during her graduation speech, she made a big announcement. She let all of the graduates know that she gave them a gift, and that gift was an LLC. Now, if any of y'all remember back in the day when Oprah gave her guests on a particular show, they all got a car, right? You got a car, and you got a car, and you got a car. I guess you got to be a little older to remember that. But that's what this reminded me of. You know, she hit the news and everybody was talking about how this woman, was speaking to these graduates at Clark Atlanta and let them know, you got an LLC and you got an LLC and you got an LLC. Now, while a lot of people were just so excited about the idea of this woman who built a brand that's worth $100 million and she gifted all of these students businesses, and I believe she said, you all are business owners now. I was scratching my head and I was like, well, giving these kids an LLC is not really the same thing as giving them a business. A business is a functioning enterprise for profit where you're selling a product or service or a combination of the two. Giving them an LLC can actually kind of be a burden because there's sometimes annual fees. And if you don't really have a business, it's not really worth anything. But the idea was great. Let me be clear. The idea of gifting all of these graduates an LLC is great. But in reality, to me, it seemed a bit odd. But she is still an amazing entrepreneur that built an amazing brand. So how do we end up here? How do we end up on the bankruptcy breakdown? Well, let's run the numbers and explain what happened. Pinky Cole filed for Chapter 11 bankruptcy on February the 12th, 2026 in the great state of Georgia. Now, to be clear, for those of you who are still unaware, there is different types of bankruptcy. There is Chapter 7 bankruptcy. That is the one that most people think about when they hear the word bankruptcy. That's total liquidation bankruptcy. That's when you're basically saying, listen, I ain't got it. And you're trying to walk away from your debts, right? That is not the type of bankruptcy that she filed. She filed for Chapter 11 bankruptcy, right? Chapter 11 bankruptcy and Chapter 13 bankruptcy are payment plan types of bankruptcy. It gives you an opportunity to maintain control over the assets that you have so that, the people who you owe money to are not in a position where they could just repossess those things. It gives you the ability to say, listen, let me set up a payment plan so I can get everyone together and I can get out of this hole that I'm in. Now, Chapter 11 is normally for businesses, and Chapter 13 is normally for individuals. But as an individual, you can file for Chapter 11, especially if a lot of your debt is associated with business assets and business debts that you have. So she filed for Chapter 11 bankruptcy. Now, this could have been seen. There was some red flags that led to where we are. Back in early 2025, so a year ago, Pinky Cole and her company actually entered into a state level type of bankruptcy. She owed around $10 million in corporate expenses back then. And she entered into what's referred to as an assignment for the benefit of creditors. Once again, it's a very similar thing as bankruptcy, but bankruptcy is federal law. This is a state level type of thing. It's where she temporarily lost control of her company. She lost control of her company. Why? Let's break this down. In early 2025, Pinky Cole's business empire hit a wall. Despite a reported valuation of $100 million, the company was drowning in debt. I believe it was around $20 million of debt, and she was burning through $100,000 a week, according to the reports that I got. Now, she entered into this assignment for the benefit of creditors during that time. And in that situation, you basically give up control of the company. On February the 13th, almost a year, exactly 1 year from when she ultimately ended up filing for bankruptcy, February the 13th, 2025, she transferred all assets of the company to an independent third-party trustee. This person's job was to liquidate the assets and pay off the creditors. What happened also is that the original board of her organization, of her company, was dissolved. And, now at that moment, she was no longer the owner of the brand and the company that she built. But there is a good ending to this particular situation. She was able to buy the company back. Yes. In a very bold move in March 28, 2025, Cole used her own funds to buy back the brand, the intellectual property, the key assets. She was able to buy it all back from the trustee. And she did it in a brand new company name. And the name of the company is Ain't Nobody Coming to See You, Otis LLC. Yes. She started a new company called Ain't Nobody Coming to See You, Otis LLC, to buy her brand back. Big shout out to one of the greatest actors of our generation, Leon. And for those of you who are unaware, Leon is a member of Phi Beta Sigma Fraternity Incorporated. So shouts out to Leon. But she bought back the company March the 28th, 2025. So now she's got it back. But there are some red flags with this bankruptcy that she ended up filing almost 1 year exactly from the day that she entered into that issue with the state level. Honestly, I saw something in this bankruptcy that I don't believe I've ever seen before in any of the bankruptcy breakdowns that I've done on YouTube or in my actual practice as a financial advisor, and it's a real red flag to me, maybe not to the average person. The problem that I see in this bankruptcy is that she is filing this bankruptcy by hand, by herself. Well, what do you mean, JT? Well, just look at the screen for a second. What you see is a bankruptcy filing for Miss Cole, and you see that it's not typed up. She is literally using a pen to fill in the petition. Why does that matter, JT? Why does it matter that it's not typed up? It's handwritten. Well, the second that I saw that it was handwritten, I knew something. I knew this woman did not hire an attorney to file the bankruptcy, because no attorney is allowing their client to fill out the bankruptcy with a pen. They're going to type it up in their office. So on the screen now, you see an affidavit with the petition claiming, listen, I'm filing this pro se. What does that mean, JT? Pro se means she's doing it on her own. She is representing herself in this bankruptcy. She is not hiring an attorney to help her. That is a red flag, okay? Because we're talking about a woman who has built a $100 million brand, and now she's filing for bankruptcy. And listen, bankruptcy doesn't mean the end. It does not mean that it's over. It is a strategic way to recover when you get, over leveraged in debt. I know this. But the problem is when you have a woman who has a brand that is reported to be worth $100 million, and then she files for bankruptcy by herself with no attorney, the odds of this working out for her is not very high. It's not very high. Now, another red flag when it comes to this particular bankruptcy is that the court had to remind her that she didn't pay the filing fee. See, if she would have hired an attorney, I am fairly sure that the filing fee would have been paid, but the court had to remind her, hey, listen, in order for this to actually go through as a filing, we need you to pay us the filing fee. Now, the filing fee is $1,738. And they basically told her, listen, you can either pay us the full $1,738, or you can enter into a payment plan and you can pay us $339 a pop. Once again, $100 million brand, but she didn't file or pay the filing fee. And the court's saying, hey, listen, if you ain't got it, if you ain't got the $1,700, we'll break it up for you. We'll let you do Klarna, right? We'll let you break it up in a couple of installment payments. It's not a good sign that this is going to work out, but I'm rooting for it. Now, another red flag when it comes to this bankruptcy filing is that the court had to remind her, hey, listen, you forgot to give us some stuff. The bankruptcy procedure and process is fairly regulated, and there's certain things that they need you to give them in order for your petition to be complete, right? There's certain documentation and things that you need. And apparently, while she filed this by herself on her own, filling it out with a blue ink pen, there were some things that she left out, and the court had to remind her, say, hey, listen, by February the 26th, now remember, she filed this on February the 12th. They said, listen, by February the 26th, in order for this thing to actually go through, we're going to need some things. We're going to need a statement of financial affairs. We're also going to need schedules A/B through J. We're also going to need a summary of your assets and liabilities. We're also going to need a declaration about debts schedule. Right? The debtor's schedules. All right. These are all things we need. We also need your Chapter 11 statement of your current monthly income. Now, these are all very basic things that any bankruptcy attorney would have absolutely included in that initial filing. But once again, she is filing pro se. She is doing this on her own. That's going to be an issue. So let's run the numbers here. After she was able to comply with the court order to provide the financial information that every bankruptcy should have included, we get to peer into and take a look at her personal financial situation. Now, reported monthly combined income was $14,583. That's not bad money. That is not bad money. $14,583 is a decent income for the vast majority of people in America. But it's not quite at the level that a person would expect when you have a company worth 100 M's. You would expect a little bit more. $15,000 a month monthly income is solid upper middle class. You're doing a great job. You are achieving the American dream. You're not quite at multi-million-dollar mogul level, but you're achieving the American dream, right? But you're not quite where you need to be. Now, she says her income is derived from her various business entities. Through her personal statement, her personal statement of financial affairs, it notes that she personally had no income from employment, right? She's nobody's employee, or business operations for the current year at the time of filing, with business income flowing through her LLCs and corporations. So she's nobody's employee. She's doing it on her own. Now, let's talk about the expenses, because this is the very interesting side. Her total monthly expenses, get this, is $41,700. Once again, her income is $14,583, and her total monthly expenses is $41,700. Let's break that down. Housing and utilities. Her primary residence, her mortgage is $15,000 a month. Hold on. Let me make sure. $15,000. Now, this includes her first mortgage payment for her residence in McDonald. All my Atlanta people, I'm sure you're gonna get this corrected. Somewhere in Atlanta. Okay, somewhere in Atlanta. $15,000. That is more than her income. The mortgage by itself is more than her income. All right. Housekeeping and maintenance, $2,000. Utilities, $656, which makes no sense. On a house where your mortgage is $15,000 a month, I can't understand how your utilities are so low. You must be only heating like one room or something. That doesn't make sense. But also water, sewage, garbage, $250. Telecommunications, which covers her cell phone and internet, all that, that's $400 a month. Now, household and personal expenses. Food and housekeeping supplies was $2,000 a month. Personal care products is $500 a month. Clothing, laundry, that type of stuff, $600 a month. Medical and dental expense, $400 a month. What about family support? Well, child care and children's education is $1,000 a month. That is for 2 kids. And she's also taking care of her father in Jamaica. She is sending him $1,000 a month. What about transportation and insurance? Well, transportation, $400 a month. Her vehicle insurance, $1,500 a month. And she is paying $300 a month on life insurance. What about the real estate and business related expenses? All right, here we go. Now, the mortgages on the other properties is $8,000 a month. For her to budget her real estate taxes, obviously you pay real estate tax usually, either at the end of the year, the beginning of the year, but if you average it out over the year, she's paying around $1,000 a month towards that. Her property insurance is $500 a month. Maintenance and repairs on those properties, $100,000 a month. So let's just run the numbers on that. Let's do a pocket watcher reality check. That means that Miss Pinky's reported monthly income is $14,583, while her expenses are $41,700. That means every single month this woman is in the red by $27,117 in the red every month. All right, let's take a look at the assets. What does she own? Well, based on the bankruptcy, her total assets is valued at $77,723,200. That's almost the 100 M's. Now, how does she come up with that number? Well, based on the real estate, we take a look at the real estate. It says that her personal primary residence is valued at $1.3 million. She has investment properties in Baltimore worth about $500,000. She also has investment property in Georgia. Two properties in Georgia. One is worth about $600,000, the other $450,000. So total real estate is $2,894,200. Now, let's talk about the financial assets that she has and the investments. Well, if you take a look at the cash position, the cash is sitting at $3,500. That's across various accounts. $3,500 is what she has liquid. What about her investment account, her retirement account? Well, she says she has a 401k that has about $2,000 in it. Investments are about $2,000. I have $3,500 worth of cash and $2,000 worth of a 401k. Well, where is all of this assets coming from? I thought it was 77 million. Well, according to the bankruptcy filing, 99% of the value of the assets that this woman owns is based in her LLCs and corporations. She is giving an evaluation of $73,975,000 to her companies. Here's the problem. That book value was based on her 2022 valuation. I don't quite think that is the valuation that the trustee and the bankruptcy court is going to go with. That's a historical value. We need to know what it's worth right now. And that seems a bit high. Now, let's take a look at her personal property. Well, based on the bankruptcy, it says that she has a fleet of vehicles. Now, these are mostly company vehicles. These are food trucks, right? And she gives her food trucks these little names. One food truck she calls the Hoochie Cruiser. The other one she calls the Community Slut. These food trucks are worth about $435,000. She claims that she has jewelry, personal jewelry, worth about $85,000. Let me tell you something right now, Miss Cole. You most likely will not get that dollar value for your jewelry. Jewelry is one of the biggest scams out there. If you really had to sell your jewelry, I extremely doubt that you're going to get the $85,000 that you think it's worth or that you even paid for at retail. If you try to resell jewelry, you will be surprised at how low it goes. What about designer shoes and clothing? She reports a value of $15,000 and household good and furniture about $19,000. So let's do a quick breakdown and summary. The real estate is worth about $2.89 million. Well, that's an appreciating asset, things that go up in value after you buy them. What about the depreciating assets? Well, her depreciating assets are about $554,000. Those are the things that go down in value after you buy. What about her liquid assets? Well, she only has $5.5 thousand. So that's less than $6,000 of actual liquid assets, talking about cash and investments. So the big bulk of the value in her net worth is the business equity, which she claims is 73.9 million, but that's on paper. It's on paper. Why is that a problem? See, the problem is when it's on paper, it really doesn't mean anything. Because if you can't sell it for that, if no one is buying it for $73.9 million, it doesn't quite mean anything. If you can't go to a bank and get a loan on that paper that's worth about $73.9 million, it's not worth anything. You want real assets in that situation. Now, let's talk about the debt, because this is why we're here. Debt is the reason why people file for bankruptcy. Now, her total reported debt is over $3.6 million. So let's go over that. Now, her primary residence, she is reporting the mortgage at $1.3 million. Now, let me remind you, she said that the house was worth $1.3 million. So if the house is worth $1.3 million and the debt is $1.3 million, that makes me believe that you have no equity in the property. You have no equity in the property. That's a problem. What about the investment property mortgages? Well, the investment property mortgages is $1.5 million. $594,200. That seems a bit odd. We're looking at 1.5 million, right? 1.5 million, and the real estate is worth, let's see, it looks like less than that. I think she's upside down. I could be wrong. I'm doing this on the fly. But when I look at my notes here, it seems to me that if her investment properties is right around, she said, seems like she's very close. She's very close to being upside down on the investment property. That is a problem as well. She also has debt on the vehicles, the Slutty Vegan food trucks, the Hoochie Cruiser and whatnot. And remember, those are things that go down in value. Now, what are her other debts? Her other debts are debts to the government, not the federal government, surprisingly enough, not the IRS. She owes the Georgia Department of Revenue. How much does she owe? She owes $191,952.12. Yes, this is unpaid state taxes. What other debt does she owe? Well, she owes the Small Business Administration. Yes, the SBA. Based on the bankruptcy filing, it looks like Miss Cole, she got an EIDL loan. This is one of those COVID loans, the Economic Injury Disaster Loan from the COVID-19 era. $1.2 million. But I think I see a problem here where a bankruptcy attorney might have been able to help her out, or at bare minimum, a financial advisor could have helped her in this situation. She's labeling this debt as unsecured. What's the problem with that? The problem with that is I am very familiar with the SBA EIDL loans. And based on my personal knowledge of how those loans work, when you signed up for an EIDL loan, depending on the dollar amount that you took, you had to do a personal guarantee on that loan, and you put up all of your personal property assets and, with the company and yourself as collateral. So for her to say that it's unsecured seems a bit odd. See, if you got a loan that was over $200,000 and her loan is $1 million over $200,000, it makes me think that she has a personal guarantee. Could be wrong. Maybe she found a loophole. But generally, when it came to these COVID-19 EIDL loans, if you got a certain amount, which I believe was over $200,000, you had to give a personal guarantee, and you did give collateral on that loan. So I think that might be an issue. She also owes American Express. Looks like $26,000 to American Express. And she owes legal and professional fees, about $50,000 that she owes to various law firms. All right. Now, breakdown of the debt. We are looking at mortgages at almost $3 million. She owes the SBA $1.2 million. She owes the Georgia Department of Revenue $191,000 and various credit cards and vendors over $76,000. All right, so let's run the numbers. What would Miss Cole have to actually make to afford the lifestyle that she is currently living? Well, to cover her lifestyle expenses, she would simply have to factor in a 50-30-20 budget. What is that? A 50-30-20 budget is where you break down the money that comes in and you say 50% of your income is going to go towards your needs. 30% of your income is going to go towards your wants, and 20% of your income is going to go towards saving and investing. If you do this in your personal life, no matter how much money you make, you will not go bankrupt. I can tell you that right now. You will not go bankrupt. So in order for her to be able to sustain this lifestyle, she would need to make a monthly income of about $83,000. That means she would have an annual income of about $1 million. The problem is she makes about $14,583 a month. That means she is short, based on her lifestyle, she is short over $68,000 every month to be able to maintain the lifestyle that she wants to have for herself. Now, if she continues to make the type of money that she is making, which is decent upper middle class money, she could easily sustain a lifestyle where her needs would cost around $7,291 a month. That means she can spend $4,374 a month purely on her wants. Talking about fun money, fun money. Then she would be able to comfortably save and invest $2,916 a month. This is the budget that she needs to live by based on her income. But the problem is she has this debt that is hanging over her head, and that is why she filed for bankruptcy. Now, people, listen, she is in the very early stages of this bankruptcy. There's many things that have to happen. One of the most important things is she's going to have a meeting with the people who she owes the debt to, giving them an opportunity to see what exactly is going on. She also has an opportunity to present to the court and to her creditors a plan, a 3 to 5 year payment plan to get everybody in order. So as more news comes out, the Pocket Watcher will review what's going on. We will most likely do a part 2 to this story very soon. But listen, if you are having financial troubles right now, you probably don't owe the SBA $1.2 million. You are probably not upside down in your personal residence. But if you feel like you're living paycheck to paycheck, if you feel like you don't have enough cash saved up, if you do not have a retirement account, then I invite you to follow the Pocket Watcher's 7 money rules. Yes, these 7 rules will make sure that you will not file for bankruptcy. And even if you have to file for bankruptcy, you'll be able to follow the Pocket Watcher's 7 money rules to rebound from a bankruptcy. We're talking about number 1, budgeting. Number 2, emergency saving. Number 3, debt planning. Number 4, insurance planning. Number 5, tax planning. Number 6, wealth planning. And number 7, estate planning. If you follow these 7 rules, you will find financial peace in your life. Now, I can't guarantee you that you'll be a multimillionaire, but you will not live paycheck to paycheck. And If you need help, if you do not have a budget, if you do not have a debt payoff plan, I invite you to go to my website, pocketwatcher.net. Click the free app button, and you can sign up for free to sign up for Pocket Watcher financial planning app that will allow you to build your budget, track your money, see where your money is going. You can also build your debt payoff plan, plug in all of your debts, press one button, and the Pocket Watcher app will tell you exactly how much money to pay on which debt at what time to get out of debt the best way possible. And the Pocket Watcher 7 Money Rules is right there in the app. And if you have a personal financial question that you want to run by the Pocket Watcher, just go to my website, pocketwatcher.net, click the Ask JT button, fill out the form. And when I get time, I do the best I can to get you an answer. And of course, if there is a celebrity or a influencer that has filed for bankruptcy, doesn't matter if it's recent or if it was years ago, put their name down in the comments of this video. And when I get time, I will add that name to the list, and I'll do the best I can to get you guys a video. Thanks for watching.
Are you looking for real financial advice? Thornton Financial is here to help. Certified Financial Planner Jayson Thornton specializes in tax and wealth planning. Are you living paycheck to paycheck with no retirement plan? Do you need help with the IRS? Book your free consultation with Thornton Financial today. Budgeting, savings, debt management, and retirement. Even tax debt settlements. Get the advice you need to live your best life. Book your free consultation appointment today. Go to www.thornton-financial.com.